Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 23rd, 2026, and we're diving into the latest earnings report from USCB Financial Holdings. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. USCB Financial Holdings, the parent company of U.S. Century Bank, has just released their fourth quarter 2025 earnings report. It's a comprehensive look at their financial performance, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. USCB Financial Holdings reported a net income of $1.4 million for the fourth quarter of 2025. However, the adjusted earnings per share came in at 44 cents. John, can you explain the discrepancy between the GAAP and non-GAAP figures?
Absolutely. The GAAP EPS was significantly impacted by a portfolio restructuring strategy, which resulted in a $5.6 million after-tax loss. This restructuring was a strategic move to enhance future profitability. Excluding these one-time charges, the operating diluted EPS was 44 cents, which is consistent with the previous quarter.
And how did their net interest income perform?
Net interest income before provision for credit losses was $22.2 million, a 14.7% increase from the same period last year. This growth was driven by a higher net interest margin of 3.27% compared to 3.16% in the previous year.
Balance sheet and asset quality. Moving on to the balance sheet, USCB Financial Holdings reported total assets of $2.8 billion. What are the key highlights here, John?
The company saw an 8.1% increase in total assets, reaching $2.8 billion. Total loans held for investment also grew by 11% to $2.2 billion. This growth is a positive indicator of the bank's expanding lending activities.
How about their asset quality?
The allowance for credit losses increased slightly to $25.5 million, representing 1.16% of total loans. The ratio of non-performing loans to total loans remained stable at 0.14%, indicating strong asset quality management.
Non-interest income and expenses. Let's discuss non-interest income and expenses. The report shows a negative non-interest income of $4.2 million. What caused this?
This was primarily due to a $7.5 million pre-tax loss on the sale of securities as part of their portfolio restructuring. On the expense side, non-interest expenses increased to $14.3 million, reflecting higher salaries and consulting fees.
And what about their capital position?
USCB Financial Holdings declared a quarterly cash dividend of $2.5 per share. Their total risk-based capital ratio stands at 13.91%, well above regulatory requirements, indicating a strong capital position.
CEO's perspective and strategic initiatives. What insights did the CEO, Luis de la Aguilera, provide in the earnings release?
CEO Luis de la Aguilera emphasized the company's solid performance and strategic decisions aimed at enhancing profitability in 2026. The portfolio restructuring involved selling $44.6 million of lower-yielding securities, with proceeds reinvested into loans. He highlighted the disciplined approach to balance sheet management and the focus on strengthening client relationships.
It sounds like they're positioning themselves for future growth.
Indeed, their strategic initiatives are geared towards long-term value creation for shareholders, and the CEO expressed confidence in their ability to deliver on these goals.
EPS forecast and market reaction. Analysts had forecasted an EPS of 51, but the actual adjusted EPS was 44. How did the market react to this underperformance?
The market was somewhat disappointed as the adjusted EPS fell short of the forecasted 51 cents. However, it's important to note that the shortfall was due to strategic restructuring, which is expected to benefit the company in the long run.
So while the immediate reaction might be negative, the long-term outlook remains positive.
Exactly. The restructuring is a proactive measure to enhance future profitability, and investors should consider the potential long-term benefits.